Money FM 89.3, the best of the afternoon update.
Welcome to Industry Insight, where we unpack the forces reshaping industries across Asia. I'm your host, Lynlee. Now, these days, paying for something means tapping a phone, scanning a QR code, or even using digital tokens you can't physically see or touch. And as money becomes more digital and even programmable, how do industry players earn trust, drive adoption, and build meaningful experiences for the everyday consumer? Joining us is Dayna Leng, Chief Marketing Officer at DCS Card Center, to tell us more. Now, DCS Card Center is formerly known as Diners Club Singapore, which some of you may be familiar with. It is now a fully owned subsidiary of DCS FinTech Holdings. Dayna, welcome to the show.
Hello, Lynlee. Thank you for having me today.
Now, Dayna, it's great to have you with us. You have decades of experience spanning legacy finance and emerging fintech, and your team is right at the intersection of storytelling, technology, and trust. So you would know better than most of us, the way we pay has never been more fragmented. Cards, wallets, QR codes, points, now even stable coins. From your vantage point, how is the consumer understanding of spending itself changing?
To be honest, what we are offering today to users are more variety to spend. So when you talk about the different options, there is cash, there's digital cash, and right now we go into an era where there is digital assets. We are letting them know that they can now tap into different funds in order to pay for whether they want to do big investments or whether it is day-to-day.
Okay. Can you go deeper into how consumers are increasingly perhaps expecting flexibility?
Think of the number of funds out there today, right? We have cash, debit, credit, like you say, points earlier, and right now we have stablecoins and even programmable money. So we have moved from a state of analog to digital, where initially there is the need for a stash of physical cash. And that is gradually moving into a mobile-first world where consumers are gravitating to digital cash, where their phones become their wallets and they can have access to all their cash at the drop of the hat. And that could facilitate domestic transfers. So when we talk about spending, it is not just what you do around you, but then how you pay people around you, and even to facilitate global transactions, borderless payments. And that is where we are now moving into an autonomous control of funds, where we talk about stable coins, where we talk about the decentralized finance as well. This allows them to more quickly and more easily and without intermediaries be able to spend overseas as well.
Now, things being so fluid and flexible, it's really fascinating, but it also poses a challenge. How do you talk to users who don't necessarily care about what's powering their transaction? They just want it to work, or does it matter?
Yeah, so there are two ways that we look at it. One is what you have in your pockets. So imagine that what you have today, what you own today, the money you have, it is a value you already hold, and it is what is yours to use. But on the flip side, and that of course goes into different forms of assets. It can be your stocks, your bonds, that is already what you have and hold. It can be in your debit card, like your prepaid cards, where you have already topped up into, again, a mechanism that you can spend readily. Or of course, it can be in your bank accounts. On the other hand, the flip side is about credit. It is what you hope to use, and it is based on your future state of finance. So right now, what we are seeing is that there are a lot of people, or there's this phrasing that people are spending beyond their means. And this also means that the prepaid card market in Singapore is actually projected to even grow into billions. I think 13 billion by 2028, yeah. So what we from DCS is offering is the option, the value proposition for consumers to spend what they own. So we are enabling consumers to access what they have easily, no matter is it in fiat or in digital assets, empowering them to spend what they own easily. So in other words, we call it like your ownership, your play. And this could potentially reshape that whole navigating of how you spend.
Okay, but let's talk about trust. In traditional finance, it came from the brand, the bank, the physical card. But in this new era where money can be programmable and borderless, what does trust actually look like?
when we talk about the Web3 environment, this is fairly new. And for every new environment, it goes through a teething phase where at the early stage, it's all about innovation. What are the brackets you can push to ensure this environment and ecosystem is able to provide more than what the current economies and ecosystems can provide. And then towards a certain point in time, governance starts to kick in. So it's a very good question that you have there, because you see recently there are more regulations that is being tightened, like MAS, for example. They have been waiting, but right now, by end of June, they did mandate that DTSP's license have to be there if you really want to play a part in digital assets in Singapore. So many other countries are doing the same. Some have passed the law, some are passing the law, some are ensuring that they are enforced. So in terms of trust, that is where institutional involvement will always come in at a certain point in time. And that is also how there's going to build trust in order to use it. Because Web3, in terms of payments, it's very similar to what Web2 needs to offer, a fundamental security and safety layer for users to know that their money is protected, their processes are protected.
Okay, so it's also very interesting that DCS recently launched a new initiative called D-Card. Would you like to talk more about that and share with us more about D-Card, its positioning, and how tokenized payments as everyday ready can be a reality?
Mm-hmm. Yeah, I want to pull that back a little bit, because when DCS launched into the digital asset space, we did have the tokenized payments, and we do have a card that can convert stable cards to fiat. Right now, that tokenized payments has taken a backseat, so I'll focus more on the D card itself.
Okay.
And 3 key points on why the D card is unique. So number one, the D card threats traditional finance and Web3 with dual real functionality. So imagine you are a Web 2.5 or Web3 native today, and you have both digital assets and fiat. And you want to be able to quickly and easily use your digital assets to support your day-to-day living, like groceries, bill payments, online subscriptions, ride-hailing, public transport, online shopping. So what D-Card does is it enables users to easily, quickly convert stablecoins, so we accept to USDT and USDC into Singapore dollars in one easy step. And then they can use it in their card for everyday purchase. So in Singapore, there's the option also to top up using money transfer from your bank account. So at the end of the day, the value you can spend with your D-Card is a blend of digital assets and fiat. So that is the first unique point. The second, let's say the listeners, some of them are very, very familiar with the Web3 world. They will know that having a card that can convert digital assets to fiat is relatively common. And that's not wrong, yeah. But what is unique about D-Card is that it is regulatory first. So earlier on, you spoke about how to gain trust, and that is what is unique, and that is what we're offering, because we are firmly anchoring safety and security with all the benefits of speed and ease expected of a card for digital assets and Web3 enthusiasts. So what we do is we minimize the volatility and risk that could be associated with digital asset conversion and usage. And so the background of the D-Card is that DCS issued this card. And DCS itself, we are a regulated card issuer under the MAS Banking Act. We are providing consumers with bank-grade security and institutional trust that they are familiar with in digital asset conversion and usage. And for DCS, we are also very, very careful to partner with regulated and accredited partners. So our entire process, stablecoin to fiat conversion, is managed by MAS-regulated DPTs. Our virtual account custody is with DBS, and the card scheme is with Visa. So all very, very strong regulated brands in the market. And the end-to-end back-end process and ecosystem keeps consumers safe. And on that note, being regulatory first for D-Card would also become a cornerstone to increase acceptance. So earlier on, I talked about the tightening of regulations. This actually is a signal to DGens that institutional involvement would happen. And for longevity, for continuity, there is more acceptance to positive governance from the DGens themselves. And I think you would also have heard that there are a lot of crypto cards that come and go.
That's
but
right.
for DCS, the unique thing is we can commit, and that is truly unique that we are not going to give you surprises yet. They're going to be firmly established here to stay.
Talking about cards, let's talk about demand. Well, seeing, like you mentioned, non-financial brands as well, embedding wallets and payment features into their apps. What's driving this explosion in cards as a service and embedded finance?
So at the core of it, embedded finance is about removing the gap between where a transaction starts and where it finishes. So for e-commerce companies, they understand that by embedding financial products like cards, wallets, BNPL, loyalty into their ecosystem, it reduces friction.
Okay, let's go to the merchant side. Now, we hear a lot about stable coins and token-based payments. How real is this demand?
So for merchants, to be honest, DCS is also both a card issuer and a merchant acquiring business. We don't see a difference for my merchant acquiring arm of where the funds comes from. So whether it is fiat or digital, merchants are agnostic to that. What they want to know is that the interchange fees that they have to pay in accepting the payment is going to be very reasonable and affordable because that eats into their revenue. So in fact, when we are able to provide merchants with additional fund sources where they can easily accept Web3 payments, it is a plus for them, which means that they would have more spending and more revenue.
Okay, so I suppose the real breakthrough isn't necessarily in the technology, it's in making the experience feel frictionless and familiar?
It's the back end as well. So in order for payments to be made in stable coins or in crypto itself, the back end infrastructure is currently not very widely available. But the flip side to what we are helping to mend that gap at the interim is to offer solutions like the D-card, where while the merchants cannot directly accept stable coins, what they can is accept a card that already has converted their stable coins into fiat. So it took 2 steps. It's taking 2 steps now, right? Where you need a card to do the conversion, then you spend. I think the utopia, the next step to what the industry is looking at, is where you don't even need that step. The option would be there for where the point of sale terminal itself, the merchants itself, can accept stable coins, cryptocurrencies, just as it is.
Okay, and speaking of that, we can't have this conversation without touching on AI. Beyond fraud detection, how is it influencing how we engage consumers in payments?
AI is very much a play of how we connect better with customers. So in terms of how we use AI to personalize offerings, in how we use AI to create triggers and cues to activate users who are not using, to activate users to increase product holding, to activate users to understand more about the benefits of the card, again, to drive consumption. Those are what the future of AI would look at.
Is there a balance between, anticipating the needs of consumers and still giving them control with AI in the picture?
To be honest, that is definitely possible. So AI learn from the behaviors that users are exhibiting. So, like, for example, what is payments marketing? Payments marketing is where you embed a sliver of AI in to understand through historical transactions what the users are interested in, what they are keen on, so that you can design your rewards, your programs, your products, your retention, everything that is very much in line with what the users really care about. So in terms of AI, we are not trying to create assumed understanding and pushing it out to the users. So the users actually have very much full control of what the kind of pushes or the kind of programs that are going to be issued, which is very much more in line to their actual behavior.
Okay. And before we wrap up, Dayna, I'd like to get your quick takes on a few things. One payment trend the industry is underestimating.
Web3.
Web3, okay. A fintech buzzword you gladly do away with.
Ooh. Can I pass?
Okay. Okay, finally, your personal tagline for the next generation of spenders.
Your ownership, your play.
Okay. Dayna, thank you so much for your insight today and for bringing your marketer's lens to a space often dominated by just tech and product. Thanks for being on Industry Insight.
Thank you, Lynlee. Thanks for the time today.
Dayna Leng, Chief Marketing Officer of DCS Card Center, on the evolving relationship between trust, technology, and the way we spend. This has been Industry Insight with me, Lynlee.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.